What's up, America? This is Dr. Nitin Chhoda, and in this training video, I'm going to talk to you about how not to invest in the stock market during this crisis. Now, the stock market was at all-time highs November, December, January, February. The Dow Jones Industrial Average was hovering right around 29,500. A lot of stocks were at all-time highs. Anyone and everyone that you knew that was in stocks was making money. Everything was going up and up and up, and then the party ended right around February and March. In fact, on the 23rd of March, the Dow Jones Industrial Average fell as low as 18,591. Now, when you think about the drop from 29,500 to 18,591, you're looking at a 38% drop in the stock market in a matter of weeks. A 38% drop. That means if you had $100,000, it came down to an average of $62,000. Now that has wiped out savings for a lot of people. That has essentially been a debacle for a lot of people. Now, what's happened since then is there has been a bit of a recovery, and I say a bit of a recovery because at the time I'm recording this training, the Dow Jones Industrial Average is at 24,000. So there has been a bit of a recovery, but the thing that really concerns me when I was starting to do some research and when I talk to a lot of individuals is that people are jumping and rushing back into the stock market because they feel there's a lot of value to be had. They feel there's a lot of bargains out there. Now I have to tell you, I've been investing in the stock market for 15 years. I bought Apple back in the day. I bought a whole bunch of stocks that I've held on to, and I've done quite well. But at this point in time, what I'm personally doing is waiting and watching. I can talk to you about what I'm doing, and I can speak from my own experiences because I want you to make decisions on your own. I'm definitely not a financial advisor, so I can't advise you on how you should handle your stocks because I don't know what's going to happen a few months down the road. But my plan as a long-term investor has always been what's going to happen 10 years, 20 years, 30 years down the road. And I'm going to talk to you from that perspective in this training. So the thing that really caught my eye was an article on CNBC that basically said millennials are piling into stock trading to beat the market. Now keep in mind that in the last several months, and Robinhood started this trend, so I'll give them credit for that. In the last several months, a lot of major trading houses have now started offering free stock trading, which means pretty much anyone can jump into the stock market and start trading. And that enthusiasm has led people to come back to the market in the last several weeks. And that's what I want to talk about in this training today, because if you're going to rush into the market at this point in time to make a quick profit, my personal recommendation would be, I personally believe that that's not a good idea because the market could see new lows at this point in time. And even if it doesn't, and even if the market goes up, I don't think that any of us watching this video training should be short-term investors. Not in a good economy, not in a bad economy, not in good times, and not during a recession, and definitely not in the middle of an uncertain environment like this. So what made me want to talk about this? This particular article, stock markets, let's see, the article is millennials are piling into stock trading to beat the market. Here's what you need to know. So online stock trading platforms have seen a surge in demand in recent months as investors seek to take advantage of undervalued equities. So investing app Robinhood, they saw record deposits in the first quarter of 2020 with daily trades up 300% compared to late 2019. So as prices went down, a lot of people got in and started speculating, and that increased the volume that Robinhood is seeing. Other trading houses saw demand surge 220% and 158% respectively. So clearly there's been a lot of activity, there's been a lot of momentum that's led people to get in and start investing, because I think people are now asking themselves, where are the opportunities? What has changed in the world? And I think it's an interesting question, asking what has changed in the world. In fact, Jeff Bezos, in one of his interviews, said, and I quote Jeff Bezos, he said, "It's interesting, I do get asked quite frequently what's going to change in the next 10 years. One thing I rarely get asked is probably even more important. And I encourage you to think about this, is the question, what's not going to change in the next 10 years? So I want you to hold that thought for a second, and I'm going to come back to that as I get back to the article on CNBC. So the article basically says, many of these new young users are first-time investors and they're age 34 or below. So even though we're in the middle of a pandemic and even though the stock market has seen wild fluctuations, I mean 38% in the span of a few weeks is excessive. A lot of online trading platforms, including Wealthsimple Trade, recorded a 54% surge in new users and a 43% surge in total trades. In fact, one of the experts, Raging Bull Trading's founder Jeff Bishop, said many millennials are now looking for new opportunities to make some extra cash or trying to recover from earlier losses. He said a lot of people are at home and have got more time on their hands, and many unfortunately have lost their jobs and are looking for new opportunities. Younger investors are looking for ways to recoup their money and they're really interested in low beat up stocks. Now, I'm all in favor of buying stocks, and like I said, I've been a stock market investor for about 15 years now, and my recommendation to everyone watching should be always buy stocks for the long term. Always try and buy something with the intention of owning it over several years, 10, 15 years or more. The stock market is like a pendulum. It really swings both ways. It can be extremely excited on one day and it can be extremely depressed on another day. So for you to be able to catch the swings of the pendulum is very challenging. Some of the best investors like Warren Buffett have basically said they don't know what's going to happen tomorrow, next week, or even a few months from now, but they have a fairly good idea of what's going to happen 5 or 10 years from now. So this surge in quick trading, this surge in volume, which is basically what this article refers to, is not a good idea because it could cause even more problems if the market sees a major downturn. In fact, speaking of downturns, Howard Marks, who's a very well-known investor and the founder of Oaktree Capital Management, basically said the stock market rebound, in other words, the rebound from 18,591 to about 24,000, where it is now, in his exact words, the rebound is not reflecting reality. His exact words are, we're only down 15% from the all-time high of February 19th. And he said, it seems to me that the world is more than 15% messed up. Isn't that interesting? And his belief is there's a sharp disconnect between the stock market and the reality that the world is living in amongst this outbreak. We have one of the top investors in the world, one of the, he's written several books which I've read, and he basically says that the extent to which things are messed up, the economy has taken a downturn, millions of Americans are unemployed, a lot of major retailers are going bankrupt, a lot of companies need bailing out. That is not truly reflected in the stock market. In other words, it is quite possible that there could be a big stock market crash coming as far as Howard Marks is concerned. It took 7 years to get back to the 2000 highs in 2007. And it took 5.5 years to get back to the 2000 highs in late 2012. So is it really appropriate, given all the bad news in the world today, that we should get back to the highs in only 3 months? That seems inappropriately positive. So again, we have one of the top investors in the world saying that in the past, it took several years to recover because the economy is not going to just recover just like that. It's not going to happen. He said it took several years to recover in the past, 5 years in some cases, 5.5 years. So in fact, it took 7 years to get back to the 2000 highs in 2007 and then 5.5 years to recover from the 2007 crisis, which basically led to the crash in that time period. So he said that if we seem to be recovering in a few months, in response to the current crisis, that's too quick, and he feels that the stock market isn't reflecting reality. So then going back to the article that talked about a lot of people jumping into the stock market to try and make up for lost money, that is the thing that I really want all of us to be careful about. That's the thing that I want all our viewers, all my subscribers to my channel to be careful about. By the way, if you appreciate these tips, a lot of time and effort goes into planning these videos and producing them and releasing them. I would really appreciate it if you can click like, and if you like what you're seeing, please click subscribe so you can get notifications instantly. My goal is to prevent you from losing money, more importantly to help you grow your money, and that's what this channel is about, because I am a successful stock market investor and a real estate investor. I'll be doing other videos on my real estate investing strategies as well, and I'm happy to share all of those with you. And definitely go ahead and comment below so I can see what you want to hear about, and I can interact with you in the community through the comment section. So let's get back to the other article about the investing aspect. The advent of online investment platforms has made it easier than ever for people to buy stocks of individual companies. We know that Robinhood started the trend, and then it was, E-Trade and Charles Schwab and Merrill and all of the others, Fidelity, that started to do $0 trading, which now means the barrier of entry. Pretty much anyone can go in there and start trading stocks. It's a good thing because it allows us to not worry about transaction fees, but in a sense, it's a not so good thing because it allows all of us to think we're experts. It's very difficult to be an expert and beat the market in the short term, but it is possible to try and win the game in the long term if you make the right selections, which is basically what I've done. But this video is about your general approach towards investing. I think that at a time like this, you should hold on to cash, you should conserve your assets, you should essentially be ready to find opportunities as they come along. And I think being patient and being waiting is extremely important. In fact, Warren Buffett basically said that he considered himself, and I'm paraphrasing here, Warren Buffett basically considers himself a baseball pitcher, and he's, he gets a bunch of balls thrown at him and everyone's like, swing, swing, swing. But he said that, he doesn't swing regardless of what the world says, regardless of what's pitched at him. He's just right there waiting, and when the ball ends up in his exact sweet spot, that's when he swings and that's when he hits a home run. So you need to ask yourself, first of all, you need to research companies that you're comfortable with, that you feel are good companies that are going to be around for the long term, and then that's when you do your research. You read the shareholder reports, you analyze the PE earnings ratios of the stocks, and then you invest. I would not advise anyone watching to invest for the short term, to try and make a quick profit in a few weeks or a few months, for two reasons. One, if you do, you'll think that you did a good job, whereas in reality, it's more likely to be a statistical anomaly. You're more likely to be lucky, and that gives you a false sense of confidence, and that can be very dangerous. You'll end up taking bigger risks, and that could hurt you. Number two, there is a very high likelihood, based on what Howard Marks has said, that the worst is yet to come, that a stock market crash or at least a significant correction is very likely given the state of the economy, because essentially the stock market is a lagging indicator of what's happening in the economy. So if the economy was doing very well, then obviously the stock market is doing well. But the moment the stock market sensed that things were off, then it kind of tanked. But now the stock market's anticipating that we'll open quickly, that the testing will go as planned, which is great, but then the actual impact of the actual economic impact is so significant that the stock market could trade sideways for the foreseeable future. And me personally, I'm not investing for the short term. I'm still looking at opportunities in the market. And I know you might comment and ask me what individual stocks I invest in. And at this point, I'm going to talk to you about general philosophy and general strategies, because I feel that the mindset is so much more important to get right, as opposed to, hey, what should I buy today? I need you to understand and embrace the mindset that you should be investing for the long term and not just being a quick player in the stock market where you're trying to just make an entry and make an exit and make a quick profit. And coming back to this article one last time, basically the article says that a lot of investors are interested in stocks that are thriving in this new environment, such as telecom, pharmaceuticals, and entertainment, as well as stocks that they believe are completely oversold, like travel stocks, dining stocks, and bank stocks. So if you feel confident about the company and if you've done your research, by all means invest, but invest for the long term, not for the short term. That would be my feedback. Once again, I appreciate everyone watching. If this video was helpful, please go ahead and click like, click subscribe, and smash the notification button for the YouTube algorithm. Also, go ahead and comment below. I look forward to interacting with the community. Thank you so much, and I'll see you in the next training. Thanks. Bye.